Welcome back to the channel. You're here with Dividend Talks and we're talking all things dividend growth investing. Now on today's episode we have got some exciting news. So we're going to discuss Costco, ticker symbol COST. We're going to run through why there's been a price drop, whether or not it's at its intrinsic value, and much more. Now let's get straight into the video. We're also going to touch upon the stock valuation system, run it through our model, and find out the intrinsic value. Okay, let's start off with Costco and just look at an overview. It's currently 6.12% up year to date. If we look at the 10-year, you can see that it is up 400%. Now, I know what you're thinking, it's quite a high PE at 34.25. The yield is tiny at 0.7%. Is it something that you should really be interested in? Well, look, I mean, it has grown. If you've held that over a 10-year period, I mean, you're talking some serious capital gains. Now, the reason why we're having today's episode is, as you can see, it's down just over 3%, currently trading at $481. Now, why is it trading at that? Well, yesterday Costco released their sales report, and as you can see here, on the prevailing 5 weeks, the sales are down 1.5% in the US, 2.4% in Canada, and actually up 2% in the other international stores that they have. Now, interestingly, if we remove the impact of the changes in gasoline prices and FX, we're actually looking at positive numbers. So it's actually quite surprising. You can see here it's 2.6% in total increase in comparison to the March report, up 7.4% in Canada and 7.6%, which is truly staggering for this economic climate that we're in. So it depends how you look at it, really. I mean, if you remove the gasoline price and FX, they're actually doing quite well. However, the report that they released did send the market, in the pre-market, down quite significantly, down around 4 or 5%. It's slowly trending upwards, but like I said, I mean, even year to date, if you look at this stock, Costco it trades at premium and it's up 6.24%. Now, is Costco a stock that is trading at its intrinsic value? Like I mentioned before, we're going to run it through our stock system and see, but a stock like Costco does tend to trade at a premium. So let's jump straight into our system of analyzing stocks. So Graham's valuation, we're going to run through quickly. It's earnings per share times 7, which is the PE of a company with no growth, plus 1 times the growth rate projection times 4.4, which is the average yield of AAA corporate bonds, divided by Y, which is our current yield. So we've plugged in our earnings per share, and now the growth rate projection we've got here of 15. So this will have a significant impact on our intrinsic value. This is something that I believe to be accurate based on assumptions and is also in line with Wall Street analyst estimations. So we've also added the current yield on corporate AAA bonds, 4.41, so it gives us an intrinsic value of $292.81. Now, I know this is quite significantly lower than the current trading price of Costco here at $481, but we're going to just dig into a bit deeper into our valuation and see what our overall intrinsic value comes to. So we can get rid of this, and that's our first step. Now we're going to move into our multiples. So we have 3 similar companies that we've plugged into our multiples valuation. We've got Walmart, ticker symbol MWT, Dollar General, ticker symbol DG, and Dollar Tree, ticker symbol DLTR. We plug in our stock prices, we plug in the earnings per share, and it pulls out the PE multiple. Essentially what we're doing here is we're getting the average and the median. We're going to use the average PE of these 3 companies in a very similar industry, and we're going to multiply it by the earnings per share of Costco to get our stock price for the multiples valuation model. And we have $303. Again, as you can see alongside the Graham valuation, is quite significantly lower than the current trading price of Costco. Now let's go into the dividend discount model. So what we're doing here is we're taking the yearly dividends that Costco has paid out per share that you hold, and we can see here the growth rate is quite nice. You've got an average growth rate in the last 5 years of 12.36%, which is above the US inflation for the last 40 years at 4%. So we're going to plug into our growth rate at 8.25% as our predicted growth rate. Again, it's probably on the bit more of the pessimistic side than optimistic side, as their average growth rate has been 12.36% in the last 5 years. Now that gives us a DDM price of $503, which is more in line with the current share price of Costco. Now onto our final discounted cash flow model. Again, this is one of my favorites. We input the free cash flow for the last 10 years. As you can see here, the average growth rate has been incredible for Costco at 61.47%. However, as you can see, it has not all been linear, and there have been some drops and some large increases. However, as we use the last 10 years, it gives us a better idea of the average growth rate. We've inputted here 20%, again more on the pessimistic side than optimistic side, just to be a bit more conservative in our valuation method. We then get our future free cash flows, which is pulled out from our free cash flow and the growth rate we have inputted. We then get also our terminal value, and we essentially are looking for the present value of the future free cash flows. And we've got our discount rate inputted here. So we've got the sum of the future free cash flows. We've also added our cash and cash equivalents, subtracted our total debt, and arrived at our equity value of just under 190,000. We also have our shares outstanding for Costco, which is 444, and we get to a DCF price of 427. Now, most importantly, we want to come and we want to use our average of the 4 to get to our final intrinsic value, which we arrive at 381.94. Now, some people don't like to use the Graham's valuation, so you can remove that. Also, likewise with the multiple valuation. However, for consistency in our stock valuation system, we're going to keep it in. And we have an intrinsic value of 381.94. Now, just for those that like a bit of margin of safety, I'm going to put 10% in, and the acceptable buy price would be 343.75. Now, I know this video says why I'm buying and not why I'm selling. So, what I have to say is, if you look at the growth that Costco has had and discount this yield of 0.72%, I mean, over the last 5 years, it's had 170% growth. Over the last year, it's been in a bit of a decline, but we're not here to hold stocks and trade them for a year or two. We're here to look at the long picture. So if you're looking to hold a stock like Costco, 400% increase over 10 years. Is Costco going to be a stock that's going to be here for the next 10 years? You know, in my opinion, yes, we're going to see Costco here for another 20, 30 years and beyond. So in my opinion, I think with the opportunity that we've received today, where we have a decrease of 3%, I think it gives a good buying opportunity. So me personally, I'm going to be looking into buying Costco today. Now, if there's any questions or any comments or anything you want, please do drop it down into the comment section. Please like and subscribe, as it really helps the channel, and I look forward to seeing you on the next one. Thank you and goodbye.